What is good, YouTube? Welcome back for another banger. On this channel we discuss everything cryptocurrency investing, and without further ado, let's get into the video. So the last couple of days have been extremely crazy in the cryptocurrency space. There's been a lot of news, a lot of misinformation going around, so I thought I'd do a video just collating a variety of things that have been going on. I've had a few friends message me, text me, call me, fearful of what's going on in the space. I thought I'd put a video together. It all started a couple of days ago, two days ago now. There was reports of a double spend on the Bitcoin blockchain. So essentially a transaction that had taken place twice. It was actually a $21 transaction, withdrawal from Bitmex that had taken place twice. This in actual fact didn't happen, but there was a lot of disinformation. So it started with Bitmex, one of the biggest cryptocurrency derivative platforms. Their research team posted on Twitter that a double spend took place, for around $21 transaction. And I'm not a tinfoil hat kind of guy, but something kind of tells me Bitmex may have had something to gain. Maybe the potential to front run the market, knowing they were going to do this and place a massive short trade on Bitcoin and profit in the millions. This is all hypothetical. I'm not saying that they did do this. I'm not saying that this was their plan, but something doesn't sit right with me. It just doesn't sit right. Comment down below if you think the same. And then a BSV proponent, a big BSV proponent, yep, the same BSV from the self-proclaimed Satoshi Nakamoto, Craig Wright, who we all know isn't Satoshi Nakamoto. He had a little bit of seasoning to the steak. The steak got cooked. Cointelegraph, one of the biggest cryptocurrency news platforms, reported the story, and then mainstream media ran absolutely wild with this story. As you can see, Business Insider, Bitcoin falls 11% after a report suggests a critical flaw in the cryptocurrency called double spend may have occurred, which we all know didn't. So that's essentially what kicked off the massive dip, the massive sell-off, a lot of fear in the market. If that happened to be true, which it wasn't, it would mean Bitcoin is fundamentally flawed and Bitcoin essentially is broken. If a double spend of a $21 transaction could have taken place, it means a double spend of $22 million, 100 billion people could be printing Bitcoin. And yeah, the whole crypto market would have collapsed. As you can see, the fear index yesterday, the cryptocurrency greed and fear index, which is a good indication of sentiment in the market, highly recommend you check it out, dropped down to 40. It was as high as 86 last week. It dropped down to 40 yesterday. So that was a start. And then we had Guggenheim CIO, Chief Information Officer, saying Bitcoin may have topped out for now and it's heading all the way back to 20,000. Mr. Scott Minard. Yeah, right. This is exactly the same person who said Bitcoin should be worth 400,000 and that they wanted to get into Bitcoin when it was $10,000. Listen to this.
We made the decision to start allocating toward Bitcoin when Bitcoin was at 10,000. It's a little more challenging with the current price closer to 20,000. Having said that, our fundamental work shows that Bitcoin should be worth about $400,000. So,
yeah, so you heard it clear. They wanted to buy Bitcoin at 10,000. Bitcoin ran up to 20,000. They're not effective with the SEC, and Bitcoin should be worth 400,000. And it's clear. You can check the filing with the SEC. The proposed filing would become effective on January 31st. The 31st of January would be when they are actually able to make that purchase. January 31st, they'll be able to put up to 10% of their assets into Bitcoin. So we're talking about hundreds of millions of dollars. It didn't end there. We had Janet Yellen revealing her new plans on clamping down on crypto and how cryptocurrency is used for illicit financing. She goes on to say they are mainly used for illicit financing, and I think we really need to examine ways in which we can curtail their use and make sure that anti-money laundering doesn't occur with those channels. This contradicts the information provided by Chainalysis. Chainalysis is one of the biggest cryptocurrency consultants in the game. They currently have a contract with the IRS to crack and track various cryptocurrencies. According to Chainalysis, less than 0.35% of all cryptocurrency transactions are used for illicit transactions or illicit activity. And then the next day, Yellen was saying how beneficial cryptocurrencies can prove to be. Bitcoin and other cryptocurrencies are providing financial transactions around the globe. Like many technology developments, this offers potential benefits for the US and our allies. I think it's important we consider the benefits of cryptocurrencies and other digital assets and the potential that they have to improve the efficiency of the financial system. Very, very strange. I'm not a guy with a tinfoil hat for sure. I'm definitely not a guy with a tinfoil hat. However, if this was the traditional market and someone with such significant influence were to one day say X and one day say Y, they'd definitely be in a lot of trouble. And that definitely would not be allowed in the traditional market. However, the cryptocurrency is still an infant in the game. So just be careful, guys. And just to add a little bit of salt, a little bit of seasoning to the top of the FUD, there was more Tether and Bitmex announcements to produce more documentations in their trial. If you're new to the cryptocurrency space, this sort of onslaught of bad news or fear or misinformation isn't new. In 2017, Bitcoin fell when it was around the price of $4,000 or $5,000. It crashed down simply due to fear in China. China were banning cryptocurrency exchanges. And then again in 2017, Bitcoin drops because it was reported that South Korea was going to ban cryptocurrency exchanges. Again, looking back in 2018, Tether FUD. Again, 2018, 2019, Tether FUD. This isn't anything new, guys. And the head of the bank, which supposedly actually stores Tether's cash reserves, says it is fully backed 1-to-1. So every single digital dollar or digital Tether is backed by a physical dollar in cash, which proves there's absolutely nothing to worry about. As Tyler Winklevoss says, the market has overreacted to this FUD. Smart money is piling in, which is proven further by the fact that MicroStrategy bought a further $10 million worth of Bitcoin. Their latest buy of the cryptocurrency worth $10 million takes the company's holdings to 70,784 Bitcoin in its treasury. 70,784 Bitcoin. They were buying the dip, guys. They were buying the dip. And yeah, like I said, if you're new to the cryptocurrency game, the market is extremely volatile. And look at the run up we had. If you just zoom out and go back, look at where we've come from. 16,000, massive run up. Go back even a year. Look at where we've come from. Just zoom out and it all becomes so ever clear. If you're shaking, if you're quaking, pull yourself together.
I can't breathe! You pull yourself together, young man.
In previous bull runs, we had dips of up to 41, 40, 32, 33, 40, 39, 29%. And we kept on charging up. Dips are part of the game. They're healthy and a great opportunity to stack more sats. If we ever want to make it to 100k, we're definitely going to have pullbacks along the way. Don't get manipulated and destroyed by whales who are trying to take your Bitcoin. Whales are lurking, guys. and they are ready to swipe. According to Glassnode, Bitcoin is seeing the largest liquidity depletion in recent years. Not only are funds being withdrawn from exchanges, but coins are continuously moving to strong hands. In the past 30 days, around 270,000 Bitcoin moved to entities considered as hodlers. Institutions and large players are moving their funds off exchanges, which proves that they're in it for the long term. You move your crypto to exchange, or you store your crypto in exchanges when you want to sell. And if you move it off exchanges into cold storage, it means you do not want to sell. And of course, Grayscale adds 3,544 Bitcoin over the past 24 hours, worth 118 million. Guys, look at what's going on. Underneath all the noise, look past the noise. Big money is moving in and buying the dip. Here's how whales buying the dip will impact the market. According to Glassnode, wallet addresses holding over 1,000 Bitcoin increased by 0.25% on Thursday, meaning whales were actually buying the dip. We are on target and trending with the stock to flow model, and on target to hit 100k before 2022, guys. Within the last 2 days, the number of addresses holding 1,000 Bitcoin reached an all-time high of 2,446. Over the last 21 days, 141 new whale addresses with 1,000 Bitcoin or more had been created. It's never been more expensive in history to accumulate 1,000 Bitcoin. But every single day, we're seeing more and more people, whales to be precise, accumulate large sums of Bitcoin. It costs $32 million, guys. Pay attention. And just 3 days ago, the number of wallets holding over 1,000 Bitcoin reached an all-time high of 2,426. So within 2 days, that's an extra 20 wallets that have accumulated another 1,000 Bitcoin. It's just a real shame, because this is the biggest wealth transfer in a generation, and a lot of people who could be benefiting from accumulating and holding their Bitcoin are not going to benefit. This is the first time in history that normal people like yourself and I were actually able to get in the game and accumulate as much Bitcoin as possible, and the institutions aren't even in. And way before the rich and the wealthy, back in 2009, 2010, it was cyberpunks and people buying illicit things online. There's been many years and many opportunities for people to accumulate Bitcoin, but they've thrown it away. The fundamentals have not changed in the slightest. They're increasing and they're getting better every day. The Bitcoin narrative is getting better every day. BlackRock, the largest asset manager on the planet, has just given the green light for 2 of its funds to invest in Bitcoin futures. Yes, it is cash settled Bitcoin futures. Yes, so technically speaking, not the hard asset Bitcoin itself, and it's paper settled Bitcoin. However, it's definitely legitimizing the space and shedding more light on the space, and is a start. A fund manager survey run by Bank of America has indicated that Bitcoin is the most crowded trade after passing long tech. So Bitcoin has officially taken over long tech and is the most popular trade on the market. Bitcoin is the most popular trade on the market. Pay attention, guys. Follow the money. Put on your Bose noise cancelling headphones and cancel out the noise, and pay attention. Send this to your friends, your cousin, your sister, your boy, your girl, your dog, your cat, anyone who's panicking right now, and let them know it's all good in the hood. The fundamentals haven't changed. An eToro survey finds pensions and endowments are finally waking up to crypto. Everybody is excited and they want to get into the crypto market. They understand that this is a hedge against inflation. They see the hyperinflation coming and they're getting prepared. Bitcoin has beaten every single asset class since its creation by a long stretch, averaging over 200% compounded annually. They want to get in the game. Everybody wants to get in the game. Again, MicroStrategy, Bitcoin for corporations, they'll be running a 2-day workshop and they're going to be sharing their playbook to teach other corporations how to get into the game. Don't be the guy or the woman who's going to continually keep buying the top and selling the dip. Eventually, you will get wrecked.
I've got nothing left. I've got nothing left.
There are a lot of similarities between this market and 2017. BTC stood at 29,000 on January 1st. Even if it only goes up only half as much as in 2017, it's still going to top $325,000. Either way, it's shaping up to be deja vu all over again. I'm telling you guys, watch what's going on around you. The volatility we're currently experiencing now is the same volatility at the start of the 2017 bull run, and also the same volatility at the start of the 2013 bull run. So according to this, we're just in the gearing up phase, as it were in 2017, as it were in 2012 to 2013. This is a perfect time to be buying dip, in my opinion. I'm not a financial advisor, but in my particular opinion, this is a perfect time to be taking the opportunity when you see it to grasp and accumulate as much as possible. And taking just a quick look at the market, Bitcoin's down today just a tiny bit. ETH slight bounce back. Bitcoin still down 13% on the week. If you were to go in and have a quick look, Bitcoin is still 22.9% down from its all-time high. So you're still buying Bitcoin if you buy today at 22% dip. Could it dip even more? Potentially. Could it go up 50% tomorrow? That's also a potential. I'm not a genie. No one knows what's going to happen, but history would normally prove that buying Bitcoin at massive dips usually proves to be a great and smart move. XRPs, the market just seems to be kind of slow at the moment. Chainlink is up 12.29% as we speak. Chainlink is doing well. It's beating the world at the moment. And the rest of the altcoins are kind of just pulling themselves along. DeFi coins are doing well. Uniswap, Aave is doing well. Tezos is doing well, probably off news that Grayscale may be launching a Tezos fund. And synthetics, again, DeFi is doing pretty well. And yeah, thanks for watching the video, guys. Don't forget to like, comment, subscribe, share the video. It really does help push the channel so more people like yourselves can stay informed and benefit from the video. Even just a little comment to say hi, or for the YouTube algorithm, a comment saying for the algo, just shows me that just shows me it's not just bots watching the video. I'll catch you guys in the next one. Peace out. Show.